Are you a high-income earner staring at your paycheck thinking, how am I working this hard and still losing so much to taxes? If that's you, there's a powerful but often misunderstood strategy that could help you significantly lower your tax burden, maybe even reduce it to zero. And it's called real estate professional status, or REPS. My wife and I use this strategy to legally shelter 100% of our income for 7 years. So in this video, I'm going to walk you through what REPS is, how to qualify, and the biggest mistake high-income taxpayers make when they try to use it to lower their taxes. Hi, I'm Kenji. I'm a physician and a real estate investor with over 25 years of investing experience. For the last decade, I've personally qualified for real estate professional status, and for 7 of those years, my wife and I paid 0 in income tax. That was before we moved to Puerto Rico, which has its own unique tax benefits, which I'll cover in a future video. Now, quick disclaimer, I'm not a CPA and I'm not giving tax advice. What I'm sharing is what we've done ourselves. This isn't theory. It's not someone preaching something they've never done themselves. This is what it actually takes to qualify in the real world. Because while your CPA may know the IRS rules, they probably haven't claimed REPS themselves. And most can't tell you what it really takes to get there. Now, before we dive into the details, let's bust one of the biggest myths about real estate professional status. You do not need a real estate license. That's right, you don't need to be an agent. You don't need to pass an exam. REPS isn't about credentials, it's about your time. Anyone can qualify if you meet 2 specific IRS requirements. So what are those requirements? According to IRS publication 925, to qualify for REPS in a given tax year, you must meet both of the following criteria. The first requirement is called the 50% test. You need to spend more time on real estate activities than you do on any other job or business. The second requirement is often referred to as the 750-hour rule. You must log at least 750 hours in real estate in 1 calendar year where you're actively involved. Let me be really clear. You need to meet both of these. One alone isn't enough. Coming up, I'll break down exactly what counts towards those hours, plus how your spouse can qualify even if you're working full-time. Let's start with the first requirement, the 50% test. This is the one that trips up most full-time professionals. The IRS says more than half of the personal services you perform in all trades or businesses during the year must be in real estate activities where you materially participate. In plain English, if you're working a full-time job, let's say 2,000 hours a year as a doctor, lawyer, or engineer, then to qualify for REPS, you need to spend more than 2,000 hours actively working in real estate. It's not impossible, but it's not realistic for most people. But here's what I did. I reduced my clinical hours to about 500 hours per year. I started moonlighting, picking up shifts when I wanted to. That freed up my time to go all in on real estate, and that's how I met the 50% test. You don't have to quit your job, but you do need to be strategic about how you spend your time and where those hours are going. And if scaling back your hours isn't an option, don't worry. I'll show you how your spouse can help you unlock these benefits for both of you, even if they're not working full-time. But first, let's talk about the second half of the equation, the 750-hour rule. This is where you have to log at least 750 hours in real estate in 1 calendar year. But you might be wondering, what counts as an hour and what doesn't count? What doesn't count are passive activities, like investing in someone else's deal without being involved. That might generate income, but it won't help you qualify for REPS. Now, later in this video, I'll talk about how to track and document these hours properly, because if you're ever audited, good documentation is your best defense. But before we go there, let's talk about one of the biggest advantages for couples. If you're married and filing jointly, only one spouse needs to qualify for REPS to unlock the tax benefits for both. Now, this is a huge opportunity, especially if one spouse works fewer hours or stays home. In our case, my wife and I were both practicing physicians. She continued to work full-time and I reduced my hours and qualified for REPS. Together, we were able to shelter both of our incomes because we filed jointly. And that made a huge difference for our family's finances. Even if you're the main earner, your spouse can play a key role in helping you reduce your tax burden and start building freedom together. Now, there's one more piece to this puzzle, and it's called material participation. This is another place a lot of people get tripped up, so I want to make it really clear. Put simply, this means you can't just own the properties, you have to be actively involved in operating them. The IRS outlines 7 tests to prove material participation, and you only have to meet one of them. The most common one, and the easiest to remember, is this. If you spend more than 500 hours a year actively working on your rental properties, you qualify. Now, that may overlap with your 750 hours, but it's not automatic. The important thing is that you're involved in meaningful ways, making decisions, solving problems, managing operations, not just signing checks. Now, if you outsource everything or use a full-service property manager, that could put your real estate professional status at risk. That's why understanding how to participate is just as important as tracking how much you participate. You'll want to document everything and in real time, as opposed to scrambling at the end of the year and documenting your hours then. Most people track their hours in a spreadsheet. I like to track my hours in my calendar. Now, this is a big enough topic that I'm covering it in more detail in another video. So if you're planning to use property managers or you just want to make sure you're staying compliant, be sure to subscribe. I'll show you exactly what counts and what doesn't so you can qualify with confidence. Now that you understand how to qualify for real estate professional status, let's talk about the #1 mistake we see high-income earners make. They focus so much on lowering their taxes, they forget to learn how to buy a truly great deal. And that's the real danger. Reps can reduce your taxes, but it won't build wealth if you buy a bad deal. Now we see this all the time. Investors chasing tax savings without truly understanding real estate. They buy properties that checks the reps box, but they don't cash flow, they didn't buy it at a discount, and there's no opportunity to force appreciation. And without those 3 things, you're not building wealth. You're just buying headaches. A great deal does 3 things. Number 1, it cash flows. Number 2, you buy it below market value. And then number 3, you force the value to go higher through strategic improvements. That's the standard we teach. That's how you actually move the needle both on taxes and net worth. But there's one more piece investors often miss: risk. A great deal isn't just about upside, it's about understanding your downside and knowing how to mitigate it before you ever sign a purchase agreement. Because here's the truth, the tax benefits of reps aren't worth it if you buy a bad deal, because you lose money on that deal in the end. So if you're just starting out, don't rush. Learn how to analyze deals, understand your market, build the relationships that bring you better opportunities. And that's what my wife and I did, and it's what every successful investor we know focuses on. Not just qualifying for the tax benefits, but investing wisely from day one. The goal isn't just to lower your taxes, it's to build wealth. And that means buying real estate the right way. So if you want to learn the difference between an okay deal and one that builds real wealth, be sure to stick around, because Reps is just the beginning. Now, if you want to take the next step with real estate professional status, we've created a free quick guide that walks you through everything we covered today and more. You can download it at semiretiredmd.com/lower taxes reps. And if you're serious about building a portfolio that qualifies for reps and creates long-term income, take a look at our course at semiretiredmd.com/real estate course. It's the same framework that's helped thousands of high-income earners reduce their taxes, build real estate portfolios, and move towards financial freedom on their terms. Reps gave us more than just tax savings. It gave us control over our time, our income, and our future. And if you're ready to use your income more strategically, to build assets, not just earn more, this is one of the most powerful tools available. Thanks for watching. If you found this helpful, hit like, subscribe, and turn on notifications so you don't miss future videos where we'll deep dive on real estate strategies for high-income earners. We'll break down everything step by step just like we did today. See you in the next video.